Welcome to the Determining Trends segment of Trading in Sidebars. Find setups today, make money tomorrow. I'm your instructor, Frank Bunn. Proper trend determination requires that we must determine that the pattern has evolved in a trend continuation context. The inside bar with the proper pattern key is a very high probability trade if it occurs in a price action and contextual trend following an impulsive move. This is how we target the markets which are moving the fastest for the most immediate gain. The contextual equation is as follows. Impulse plus momentum equals context. Impulse is the price action which precedes the inside bar pattern, and momentum is the overall trend. This provides the context in which it is most likely that the breakout will explode in the direction of our trade. Remember how we determine impulse. Expansion is really impulse. The key market dynamic is expansion, contraction, and expected expansion in the direction of the original impulse. In contraction phases which follow impulse, we find low risk, high probability entries. That is the inside bar. We will couple this impulse with the specific IB pattern key in order to achieve our objective. There are several ways to determine impulse. The first is 3 or more consecutive higher highs and higher lows for an uptrend, as we can see here in the chart graphic, or 3 or more consecutive lower lows and lower highs in a downtrend. Or, conversely, 4 out of the last 5 intervals which precede the IB must be higher highs and higher lows for longs, or lower lows and lower highs for shorts. Please be certain before proceeding that you understand 3 or more consecutive higher highs and higher lows. This is what we'll call the price action trend. Remember how we measure the micro-contextual trend using the 3 and 6 exponential moving averages. We need to look at their relationship to price and their relationship to each other, whether or not they are above or below. Keeping in mind that the 3 exponential moving average is the contextual surrogate for price. Therefore, we can also determine impulse if the inside bar is the first reaction since the 3 exponential moving average crosses the 6 exponential moving average. On the MACD indicator, then, we see the 3-6 MACD crossing the 0 line, causing the micro-contextual trend change. We can see this here in the chart graphic at the white arrow. This is referred to as the contextual trend. Let's take a look at how we will determine momentum. Momentum is defined in context as favorable or unfavorable. Regardless of what MACD indicator we are using, the 3-6 period, the 12-26 period, or the 50-100 period MACD, we will always look at the MACD oscillator itself, the signal line around which it oscillates, and the 0 line to determine the trend. In any case, when the MACD is greater than its signal line, momentum is said to be favorable. In down markets, we have the same scenario. Regardless of which MACD indicator we are using, if the MACD is less than its signal line, momentum is considered to be moving down. We determine trends then using the 0 line on any MACD indicator. If the oscillator is above the 0 line, the trend is considered to be up. Conversely, determining downtrends requires the MACD to be below 0, regardless of which parameters are in use. In this chart graphic, we can see the 0 line and the MACD oscillator clearly below it. This is a downtrend. A countertrend is a trend without momentum. In this instance, we see an up countertrend where the MACD is greater than the 0 line but less than the signal line. The trend is up, momentum is down. This applies to an MACD with any of the parameters. Conversely, if the MACD is below 0 but above the signal line, we have a down countertrend. In this instance, we can see the MACD oscillator is down and momentum is up. Again, this applies to any of the MACD parameters. Remember, a countertrend is a trend without momentum. Reading trends, then, uses all 3 of the MACD tools that we have defined. The 3-6 period MACD is the microtrend, The 1226 MACD is the intermediate trend, and the 5100 period MACD is the long-term trend. We can see all three here stacked in this chart graphic. The theoretically strongest context will exhibit up or down trends on the micro, intermediate, and long-term cycles simultaneously. Counter trends are acceptable as long as momentum is present in observed cycles. The micro up or down trend must be present. In this example, we can see the micro trend is up, and we have a down counter trend in the intermediate and a down counter trend in the long-term trend cycles. This is acceptable as long as our micro trend is up. Sorting trends is easy. For uptrends, we would first begin with the strongest trends demonstrating the micro, intermediate, and long-term uptrends with momentum, followed by the micro uptrend, intermediate uptrend, and long-term countertrend. And lastly, the micro uptrend, intermediate countertrend, and long-term countertrend would be the weakest of the three. Sorting down trends is just the opposite. If the micro trend is down, intermediate and long-term trends are down, we have a theoretically strong contextual trend down. The next strongest trend would be a micro and intermediate downtrend with a long-term countertrend. And the weakest downtrend would have a micro downtrend and an intermediate and long-term countertrend. Remember, countertrends always have momentum. So where are we right now in the training? We have defined the inside bar logic, we have defined inside bar technicals, and we have determined trends with impulse and momentum using price action and context. We also understand trends and countertrends and how to sort them. Do not be concerned if all of this isn't totally clear at the moment. There will be plenty of examples in the training, including screencasts to demonstrate these trends. Next, we will study setup, risk control, and trade management. After, we will put it all together with the anatomy of an inside bar trade. This will complete the training in proper analysis and action. Determining trends is a powerful tool that will enable you to effectively scan and sort entries. The result will be homogeneous trade samples of setups in the highest probability contexts. Trend determination facilitates testing and experimentation in counter-trend environments. This concludes the Determining Trends segment of Trading in Sidebars. Find setups today, make money tomorrow. I'm your instructor, Frank Bunn.